Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It's Monday morning, January 6, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. So much for a gloomy start to 2025. Investors have finally been induced to buy the dip in US stocks. After a 5 day drop that shaved more than $1 trillion of share prices, Wall Street put the longest equities losing streak since April behind it. Stocks charged higher on Friday with each sector of the S&P 500 logging gains. The S&P 500 and the Nasdaq Composite had each notched 5 day losing streaks before Friday, shaving off a bit of gains from equity's best 2 year period in a quarter century. On 2025's second trading day, however, concerns of lofty valuations of fading rate cuts hopes went out of the window. Even so, all three indexes posted modest declines for the week, with the S&P 500 logging its third weekly loss in four. The Nasdaq 100 clawed back losses on Friday, climbing 340 points or 1.77% to 19,621, while the S&P 500 rose 73 points or 1.26% to 5,942. Meanwhile, the Dow Jones Industrial Average gained 339 points or 0.80% to 42,732. The gains managed to put a dent in the week's sell-off after an end of December rout had stretched into the first trading day of the year. The optimism came despite US President Joe Biden blocking the proposed sale of US steel to Japan's Nippon Steel for $14.9 billion, citing national security concerns. US steel shares dropped 6.5%. On the economic front, the Institute for Supply Management ISM Purchasing Managers Index PMI surprised to the upside by gaining zero point 0.9 point to 49.3, its highest reading since March, nudging ever closer to expansion territory. A run of fairly robust economic data has called into question the need for additional interest rate cuts from the Fed in the near term due to the possibility of reigniting inflationary pressures. Traders shrugged off warnings about slow earnings growth for the tech stocks, dubbed the Magnificent Seven, and continued to snap up shares of AI juggernaut Nvidia Corporation. Tesla, too, provided much of the muscle to the upside. Microsoft shares gained 1.1% after the company said it would invest $80 billion on AI enabled data centers in fiscal 2025. Rivian soared 24% after the electric vehicle startup reported deliveries that beat Wall Street expectations. Alcohol producers lost some ground after US Surgeon General Vivek Murthy said that alcohol drinks should carry a label warning of cancer risks. Molson Coors and Brown Forman slid by 3.4% and 2.5% respectively. All 11 major sectors in the S&P 500 closed higher, with consumer discretionary stocks enjoying the largest percentage gain after Thursday's rout. With fourth quarter earnings season still weeks away, analysts see S&P 500 earnings grow in aggregate this year too. Elsewhere in markets, the 10-year Treasury yield ticked higher, settling at 4.596%. Dollar slipped from a multi-year high. The WSJ dollar index had closed Thursday at 103.18, the highest since November 2022. Oil prices kept climbing. Benchmark US crude futures rose 4.8% last week to $73.96 a barrel, their highest level since October 11, 2024. Spot gold fell 0.7% to $2,638 an ounce. Bitcoin rose 1.2% to $98,261. Starting this week, a lot of the big money managers come back to the desk. Fingers crossed for this bullish trend to continue. That's it for today, folks. I will see you again tomorrow morning. In the meantime, please subscribe, share, and like this video. Thank you. Happy investing, stay inspired, and remember, it is all about Money.